Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, and I'm here to deep dive into the charts. Always remember, folks, the game plan and verified investing, it's all about no BS, just charts, which equal probabilities. Ultimately, our goal to be the casino, not the gambler. All right, so we have a big move today down in the stock market. The PPI data surging on the inflation side. So again, on the producer side, inflation jacking up massively. Holy cow, folks, this is a big number. Take a look. The PPI month over month, 0.9% versus 0.2% expected. The PPI year over year, 3.3% versus 2.5% expected. And then you look at core. Core was unbelievably hot as well. That's minus food and energy. 0.9% as well versus 0.2% expected. And even year over year, extremely hot, 3.7% versus 2.9% forecast. So these numbers, what are they telling us? They're telling us that inflation from tariffs is likely starting to seep in to the producer side. Now you might say, well, the consumer inflation, the CPI on Monday or on Tuesday, that wasn't really that bad. That's because, again, inflation start? Inflation starts on the producer side, and then over time, the producer says, oh man, these costs are going up. Let me pass it along to the consumer. And so it always starts with the producer. In addition, we've seen the wealth effect from the stock market, which is inflationary as well. It's one of the main reasons why we saw in the past Jerome Powell talking down the stock market going back into March of this year, because again, that wealth effect is inflationary. If the stock market keeps going up, people feel richer and richer and richer, and they feel like they can spend more. So you have the demand side demanding more goods, and then the producer side, where tariffs are taking a bite, also increasing prices. And again, it's a bad scenario, especially if we have an economy that is slowing. You will hear more and more the term stagflation, a slowing economy and an inching up inflation data number. Now, how did the markets react? Let's take a look here. The S&P futures getting slammed in early trading here. You can see when this number came out, look at the drop in the S&P futures. We've recovered off of the lows just a little bit, but nonetheless, this is still a massive down move in the S&P. We were trading on the S&P futures around 64.91 prior to that release. We're currently at 64.61. So again, it's about a 30-point drop on the S&P on the back of that, and we'll have to watch and see what happens when the stock market opens. If we look at yesterday we started out with a strong move, and then we faded, and then there was a gentle float up late in the day again. And again, I've often shown you guys how early in the day we see this selling pressure. I'm a firm believer from the data that I'm seeing and the hedge fund managers that I'm talking to that they are in the unload process. All right. So again, we're not talking about the John Q. Public hedge funds. We're talking about the best of the best out there, the top 1 to 2% of all hedge funds, where they're really the best producers out there. Those are the ones that are unloading. The Goldman Sachses, the Black Rocks, not that they're in their hedge funds, but they are major institutional players out there in the market. All right, now we have to flip over to the S&P chart. This is where things get even more interesting. So here we have our parallel channel. Remember, as of 2 days ago close, the bear flag was negated, but we talked about how here was your parallel channel. Now, yesterday we got a close above it, but if you refer to yesterday's game plan, we know that a close above can be a fake out to retail investors. I've seen so many times where things close above and then they actually end up pulling back, or they close below and people say, oh my goodness, this is a breakdown, and then they rally back up. And essentially what that is, that's classic psychology, and it's also games being played by the big money. The big money wants you to think it's a breakout up here. The way I've mitigated this and been able to tell if it's a true breakout or breakdown is by using what I call the confirmation signal. It's something I created literally 10 years ago to help me know when a real breakout there's a real breakout versus a fake out. And essentially what you do here is you look at the chart and you say, okay, well, we closed above, but now we need to see a secondary close above the high of that first candle that broke above. And the reason why this tells you with high probability that it's a real breakout, if that happens, is because there's only a certain amount of money that an institution is willing to devote to keeping a market down, right? And if they can close, if the market closes above it, at some point, even if they're trying to keep it down, they'll just step away and say, hey, listen, this is too strong. We can't do it. But until they see, or until we see confirmation, I'm always suspect. And because again, listen, when I was early in my career, listen, I've traded for 26 years. My first 5+ years, I got whipped out of countless trades. And listen, even today, there's occasionally a time where I get whipped out of a trade. There's absolutely. But the key is that confirmation signal gives me about a 75-80% chance that it is a real breakout versus a fake out. And right now, we do not have a confirmed break above this level. In addition, let's take a look here. I want to show you this key trend line here, guys. This is something that caught my eye. Take that same low from that parallel, stretch it all the way up here, right? So again, if we take a look and look at where this has hit, starts right here, right? Then it hits right there, that lowest point. By the way, this was the August 1 year ago major collapse. I don't know how many of you guys remember this, but on Sunday night, the S&P futures were down like 5% before they opened lower and recovered, and that gave us our next momentum move. It was an incredible sell-off, incredible. Then we see the breakdown here below that line. That was in the Liberation Day kind of beginning sell-off that ended on April 7th. And look, on the gap up a few weeks ago, we tagged it, and then look at what we tagged yesterday. And so not only did you not get confirmation above this, but we obviously tagged this line. So again, maybe we rally up today on the back of this PPI data. Right now, it's not looking likely, but let's see where we close. If we close back below this line, this could be a classic fake out before a corrective move here. All right, so something just to keep an eye on. Then we go over to the Nasdaq 100. The Nasdaq 100 in the pre-market, you can see again, same sort of drop. Tech stocks are getting hit this morning on the back of this PPI data. By the way, just a side note before we get back into the charts, as of yesterday, following the CPI data on Tuesday, there was 3 rate cuts expected into year end. September rate cut, and then I believe it was October and December. Now, as of this data right now, the Fed Watch tool is telling us 2 rate cuts. So already the markets are taking one of those cuts away based on this inflation data. And more importantly, next week, Jackson Hole, which is the big symposium of the Federal Reserve, where they get together, all the governors get together and they discuss rates. And then Jerome Powell usually speech next Friday from Jackson Hole. So there's some big stuff coming up into next week where we'll know more about what the psychology is of the Federal Reserve. All right, back to the charts we go. So if we go to the daily chart, so it looked like, again, the NASDAQ was making new all-time highs up here. Yesterday, we opened higher and then closed flat. So we've seen this very often, right? Opened higher, closed down. All right, here we gap down, close lower, open higher, close lower, right? Again, over here, same sort of deal. But you might say, okay, big deal. Market still went up. Granted, they did. But what I want to show you here is a trend line that I thought was very interesting. So all you're doing is connecting those recent lows going back to May, drag that up a parallel, and look at that parallel. All right, now why is this important? It's only important because you can see how price has respected the line once, twice, and then lo and behold, yesterday, right into that level. All right, so again, and you can see how the underbelly of that parallel starting from here, right to there, and right to there. And so, again, this only tells us there's a little bit of a correction maybe down here unless this line breaks. Obviously, like I preached to you guys, you cannot assume a level breaks until it actually breaks, and in this case, confirms. And again, we'll continue to monitor that. The U.S. dollar today is catching a little bit of a bid. Why? Well, the dollar, again, goes based on Federal Reserve expectations. So less rate cuts means less money printing, essentially, potentially, and therefore the dollar slowly gains a little bit of value in the short term. On a technical analysis basis, there's nothing there. Yields were down early this morning, and then on this data, they're pushing back up. However, yields have still broken lower, and you still have a bear flag. And so even though we're getting a little bit of a pop on the 10-year yield, it's not an overwhelming pop or any sort of negation of the bear flag. The bear flag is still there. And based even with this inflation data, the chart, and I always stress this, it doesn't matter what we think of inflation data, it doesn't matter if we think the numbers are fake, it doesn't matter. The chart is the truth, right? That is what is happening. And in this case, the probability, even though inflation looks like it's going up, which could force rates up, right now, the bear flag is still telling us, even with today's bounce, that rates eventually will go lower here. All right, Cisco Systems, let's flip into some charts of the day. Cisco Systems is down slightly on earnings. Again, they reported earnings yesterday after the bell. You can see big drop, then big bounce, and then a slow fade to the downside. Now, this isn't really a big move, right? It closed yesterday around $70.35. It's at 69.10. That's not a big move. The only level I would potentially look to trade would be probably right here, right in this vicinity. So again, if we get down somehow to this high pivot, which is this low pivot, right around the 66.45 level, that would be an interesting opportunity for a day trade. Not a swing trade, mind you, just a day trade. All right, so keep that on your radar. Coherent. This is getting absolutely walloped, down about 20% this morning. The stock, again, you can see cratering on a guidance miss. And I've already isolated here on the chart. Look at that beautiful flat line. So notice here, and this is great examples of educational technical analysis. So the stock was going up, 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 up. And then all of a sudden it was like, oh, I can't get through this level. What's going on here? Oh, this is so hard. I keep on banging on this door and I just can't break through. All of a sudden it breaks through and then it continues up. What does this mean? It means if price comes back to this level, it was massive resistance. It should be massive support. So 83.45 on Coherent. It's still a ways away. Listen, it's about $9 a day, but that would be a very major support level on the chart. Deere, again, tractor maker Deere, getting hammered on earnings here. Again, for this stock, this is a big move. For a lot of other stocks, it wouldn't be. This is down about 6%, 7% on earnings. Again, dropping pretty nicely. This stock had been just chopping sideways. You can see this is where it's currently trading. In terms of a support level, there'd be a little bit of support kind of right in this vicinity here, 467 area. There's a gap fill around 471. I'd have to reevaluate, but I'm looking at that level as a good day tradable level. What I like about it too is if you stretch it out here, notice it goes right through this center point here, right here, here, and here, right all the way through these levels, right? And so that tells me there's something in the mix there. And in fact, if you extend it out, look at that, right back to that high as well. And so things like that get my attention. And then just above it, you have a gap fill as well. So again, little things like that tell me there should be some good support around 467 to 470. Tapestry is getting hammered as well. I'll tell you guys, most stocks, even if they do well on earnings, this earnings season, most stocks have actually fallen on earnings. And again, I explained this before, right? Is that when stocks rally 100% for the quarter going into earnings, it's very hard for them to outdo themselves and continue to rally to the upside, right? It's just very, very tricky for them. Okay, so a Tapestry here, big drop on earnings. The stock is getting smoked. If we look at the daily chart, where would that first support be? Pretty obvious here. There's a former major pivot high. Now, why would this be called a major pivot high? It's because essentially for more education, right? Notice how big of a move up and how big of a move down. It's when you get the big mountaintops, that's going to be a major pivot. When you get a small mountaintop like here to here, this is only a minor pivot. Okay. So again, minor pivots can still be support. In fact, you can see how this level kind of respected it, but the major ones are the ones that are going to attract my eye because it was at an absolute huge move up, huge move down. And so in theory, what should we see based on probabilities of trading is that if we do fall into this, let's say 90.75, 90.70 level, there could be a bounce on Tapestry there. If it continues through there, that's when we start going into this secondary pivot right here, which again will be a decent level because again, you could see price here was resistance at 84.75, and then it broke above, hit, and then went higher. So that's telling me that would be your next big level. All right, but right now I'd be looking just above $90 at a key day tradable level, maybe a swing trade down here at this 84.50 level on the charts. Couple other charts catching my eye. Keep an eye on JP Morgan, possible head and shoulders pattern. It needs to break this trend line around $286. If it does, you should get a big move to the downside. Microsoft, look at Microsoft here, guys. Microsoft, major trend line that broke yesterday. Now, you have not confirmed yet. I want to reiterate that. You got to confirm, but if we confirm, then you're in, basically, if you're in Microsoft, you're looking at a break of this uptrend would then have confirmed, and you would expect further downside to go. Bitcoin. Now, Bitcoin is very interesting. So the topping tail, we did close above it. What does that mean from a topping tail perspective? It means that this no longer has power. And so essentially, you can take it away and say, you could even cross it and say, nope, no longer is that a factor on the charts. Now, does this mean that Bitcoin is an all-out buy and bullish move? The answer is no. What this means is probabilities are now 50-50. Why? Let's talk about why they're 50-50. Why in technical analysis does this mean that, so as long as that topping tail was intact, the probabilities favored a pullback, okay? 60-40, whatever you want to put on those odds. Right now, it's been negated because we had a daily close above. By the way, with topping tails, you don't have to confirm above, okay? But the reason why it's a 50-50 now is because now you have a double top. Now, double tops are not as powerful as topping tails, but nonetheless, it takes the probabilities down to a 50-50, meaning that we now have to watch the directional consolidation. So today's day on this chart is really not good for Bitcoin, right? I mean, this is possibly a major reversal candle. But let's just say by the end of the day, we rally up on Bitcoin and we start going sideways, right? What if we put in this pattern? So essentially we go up, we go down, we go up, we go down. What type of pattern is that, guys? That's a bull flag, right? In which case, if you formed that, you would start to say, okay, the odds are now, we now have a bull flag at a double top. The odds are starting to tell us it's going to go up. If you get a reversal candle, now all of a sudden that changes and it starts to sway back to negative. So essentially, we'll leave it at this, is that per technical analysis, this chart now is a 50-50. And again, no one likes a 50-50. I certainly don't. I want to know which way is the bias, but the chart is telling me, right? The chart just tells me, and I have to go by what the chart says. Now, if this ends with a big reversal candle, let's say we close below yesterday's low, that would not be good. Right now, we're trading below. That would actually skew it slightly to the negative side again. All right. So again, I understand how there's a lot of Bitcoin investors out there that they don't want to hear like, oh, but it could turn negative. But this is technical analysis, right? It's a moving target. We're always looking at what the current candle is. I always say to people, it's like a piece of a puzzle where, you're looking at the puzzle and you're like, all right, I put a few pieces in here, but I don't know. Is it a cat? Is it a dog? Is it a landscape? And then you take another piece and you're like, oh, this is starting to look like a dog. And then you take a couple more pieces and you're like, oh, wait, no, it's a cat. Or, the point being is every day is a new reveal where probability could change. And the best example of this out there to me is where you start to say, okay, well, if you ever watch the World Series of Poker, and they get their two cards down and they show it on the screen, and right away they're the probabilities, right? This guy has a 70% chance of winning. This guy has a 30%, whatever. And then they get the cards to be turned over, right? You get the flop, and then essentially the odds will change, right? That's the same thing in technical analysis, where you're always getting a new piece of information, and you have to be mobile. Our hearts, minds, our gut doesn't matter. Doesn't matter. And unfortunately, early in my career, I lost a lot of money trying to force my will on a chart, and the chart just doesn't care. And I learned the hard way. But when we go to the charts, that's how I have figured out to put myself in the best position possible. All right, ETH, guys. ETH got to nearly a double top. It didn't quite tag the all-time high. It is pulling back today. Take a look. Also a pretty red candle here. I still think there's a good chance we do come up and tag this and pierce it. Double tops generally get pierced like we just saw on Bitcoin, so keep an eye on that. Gold is not rallying on this news. Interesting how most of us Okay, well, yeah, the dollar's up a little bit, but more inflation is usually better for gold. But gold here is not rallying, and this is starting to form a bigger bear flag. So let's keep an eye on that. It's still an immature bear flag. I would still give the odds to the downside here. Silver, let's take a look at silver. Silver's coming back in. As I've said to you before, silver, I have no good read on this. Resistance here at 39.65, support at 34.65. That's all I have on silver. I'm waiting for a directional move into one of those levels. Oil is getting a small bounce today. Again, we had that beautiful bear flag breakdown here on the charts. And again, right there, you had that. So we broke. We might go back to the scene of the crime, and then I still expect a turn down to this $60 and change gap fill area of support right there. And then lastly, natural gas here, folks. If we go to nat gas again has broken, still hasn't confirmed, but today we could confirm that move, and I would still expect 263 as your next target. So listen, the theme of the day is no doubt inflation is back in the purview of the market. Now, if you're like me, you always knew it was there just by simply going to the supermarket, right? Whether you're going to Costco, whether you're going to any other store, the prices are going up on certain things. There's no doubt about it. But what we're seeing now is that CPI, remember, CPI is a lagging indicator, meaning that producer is where it shows up. And then eventually over the next 6 months, the producers generally will say, man, our bottom line, our margins are getting crushed here. So they're going to say, well, let's push 2% of this over to the consumer. Now, and this is one of the reasons why I'm concerned about inflation. Like a lot of people have said inflation is just a one-time hit. I don't believe that, and I'll tell you why. Because the consumer, the producer, I should say, the producer, let's say they see prices rise 15%. They're never going to put past 15% price hikes to the consumer on day one because the consumer will just not buy it. But what they do a little bit at a time, almost like shrinkflation in the supermarket, right? You know, they don't like to raise the prices, but what they do is they shrink the container down. And so subconsciously, we don't notice as much. We're like, oh, well, look, price of an ice cream tub is still, $3.55 or $4 or $5, whatever it is. But again, that is getting smaller. So what they do is they pass a little bit along, and then the next quarter they'll pass a little bit along, and it'll keep inflation higher. And this is going to be a big conundrum for the Federal Reserve, and this is why Jackson Hole next week is unbelievably important. All right, guys, don't forget, game plan as of the end of this week, going into next week, will be only on the Verified Investing YouTube or our homepage, verifiedinvesting.com. Hope you guys enjoyed the game plan today. Certainly going to be a good trading day in the live day trading room. Have a great one. I'll talk to you soon. Take care.